Welcome to our Wednesday afternoon home buyer seminar. We do this every week, Wednesday at 5 p.m. This some weeks to start a little early. I'm Bill Gross at Bill Gross Probate and Social Media, along with my good friend and colleague.
Patricia Castillo.
And when I say colleague, we're working together. We got a couple listings we're working on, Patricia.
We do. I'm very excited about that. A lot
Yeah,
of good opportunities in the market right now.
one closing, got a new listing opening. The market is, I know that the headlines are market slowed down and rates I know have bumped up, but whew, I'm busy. Oops, just lost you. You're so busy you can't keep on the camera. You're so busy. We can't keep on camera, he said. So which of your listings are you coming from or going to right now? She can't hear us. Well, if you watch this on live stream, this is being live streamed on Facebook and LinkedIn, YouTube, X, formerly Twitter, and other places. Any place we can get it done free. And so, Patricia, where are you coming from? Where are you going to? Still can't hear us. So if you have a funny question to ask Patricia, it's a good time to put in the chat box. If you're watching live, feel free to put your comments in, and we will be more glad to pass on the questions. Or if you want to make comments, snide remarks are welcome. Always glad to have you with that. Let's see, there we have. And then also, our other good friend we have in is Shannon, the lender.
How's it going, guys?
Good, how you doing?
Good. Thank you for having me. Can you hear me okay?
Loud and clear, you sound great.
Perfect.
Patricia's, I think, muted, or she's talking to somebody else, or talking to herself, but I can't hear, we can't hear you, Patricia, if you're there, so FYI. So Shannon, how about those interest rates?
Interest rates are not so good, to be honest with you. And I'm actually going to pull up an article that I'll share with you guys in a minute. But actually, the Market Watch says, I'm going to read the headline, Goldman Sachs pushes back timing for first Fed rate cut to September. So now the economists are now predicting, hey, we might not see the first cut in July. They're pushing it now to September. And obviously everyone, I actually just had this conversation with a buyer. We went into escrow 2 weeks ago and they were debating whether or not to lock or not. And I told them you need to lock. And today they were praising me because they said, oh my God, I'm so glad we locked, because if not, we were going to be in the sevens. And thankfully, we got them right when they were at the 6.65. That 1 or 2 days, I don't know if you remember that week where it dipped. We opened escrow, so that's where it's at. So that's why I'm telling everyone, look, prepare for the worst, hope for the best, but again, just prepare for this market that we're in right now. And the more interest rates go up, unfortunately, that's less buying power for people. However, if you have a co-signer that you can add on, if you have more money to put down, you are going to be in a better position because there's, the competition is dwindling and this is your opportunity. So rates are up, but for some people, that's a good thing. So.
Okay, so rates up. People who locked in, that's a good thing. If you locked in your rate, if you own a house, that's a good thing. I think what people need to understand, I have a property I'm in escrow in that, we're I want to say we're paying kind of cash and some alternatives. So we're locked in as far as our cost of capital. But the inflation means the house is going up in value. So the nice thing is, there was a report last week that sales were down 1.9%, but prices went up 5.7% annually. Well, that's the whole house. If you only put 10% down, that means that your equity went up by 57%. Kind of. It's not quite that accurate, but because you have costs and such. And so the inflation becomes a hedge when you own the house. It becomes a cost when you're buying it if you haven't locked in your rate. So great advice, Shannon, on locking in the rate. Patricia, how are you doing? I know you were driving around there, going to a listing, coming from a listing. What's going on?
Yes, I actually I just picked up a new buyer that was referred to me, and one of the things that they're dealing with right now is the affordability, right? With the interest rates and both parties work, but one of them it's just better to use one party's income for now. So, working on first time home buyers is really something that you need to sit down with them and learn what their goals are short term and what their goals are long term, right? Because do they want to be in a home maybe for maybe 5 years, and then from there move on to a bigger home, expand and upgrade? So right now we actually just planned out their blueprint. So we're going to be getting them into a condo to start with
Mm.
until the second spouse can have, full-time employment and can produce those documents to show that they're working full time. But they are looking to basically get into a condo for maybe like the first 4 to 5 years, and then after that, they want to expand. So this is also going to allow them the opportunity to get out of the renting cycle, start building their equity with the condo, and basically getting into the that habit and the budget, right? Getting familiar with that budget for the next few years, so that they can feel comfortable to expand and upgrade and get into a single family home. So looking at, opportunities right now, there's a lot of programs that, even though the rates are higher, that you can still benefit from that, because you're going to have less competition with other buyers that are probably waiting for rates to come down. So you can have that opportunity to, not get into a multiple offer situation right now, depending on the market, the different neighborhoods, and things like that. So that's why we're starting our home search now, because they asked, should we wait? Once I explain the market to them and what interest rates will do once they come down a little bit, how is that going to trigger the buyer activity, right? We're going to have buyers re-entering the market, prices are going to go up. So that's what we're working with today, is getting this young couple into a condominium to start with. And that's not going to be their forever home, but that's like a stepping stone to get them into their forever home.
Well,
And
I think you point out there's work involved in this process: planning, preparation, sacrificing, living in a smaller house. The first house I lived in was the smallest house in a great neighborhood, and it was the only house without a view on a street with great views. But we made a fortune on it. We flipped it in a year for $100,000 profit. That we flipped into the next house that had the view and had a nice
Imagine
house.
that.
It did
Yeah.
really well, yeah. In those days, $100,000, we bought a house for 142, and a year later sold it for 242. So that was a lot. In those days, that was a lot of money. $100,000 today is kind of like a rounding error on a house here in Los Angeles.
Still a lot of money today.
I would think
yeah,
so.
and
Yeah.
Patricia brought something up: alternative asset classes besides single family. Condos, even mobile homes. I know that these two are not the sexiest thing in the world, but they are stepping stones to get you into single families. I'm doing a pre-qual right now. This guy's gonna make 100, and I think it was like 75,000 from his mobile home, and putting out a down payment on a house. You know what I mean? And that he's going bank statement program, so he's just doing bank statements, but he has the down payment to now put into a single family. So whether it be, and I'm in escrow too on a condo as well. So whether it be a condo or mobile home, or maybe the ugliest tiny home on the block, you know, you have to start somewhere. And so I know everyone has that dream house that they want, the white picket fence, 2-story, but in order to get there, sometimes you might, again, people think it's taking a step back, but it's actually taking a step forward. Whatever transitions you from a renter to an owner, whatever the asset class is, at least it, again, sets you up in the future to build that equity and have a bigger down payment for a single family later on.
Yeah. Yeah, I know. I drive a paid-for car, and I'd love to have a new car. I wanted to, and I was loving the story of Tesla, years ago, about 4 or 5 years ago. But I didn't need a new car, and I live in Los Angeles, where it's expensive and costly and risky and all that. So I bought a Tesla worth of stock, and that Tesla stock became a down payment on a house that made more money. So, and we live in a modest house. I live in a nice house. I'm certainly not complaining. We live in a great location, great neighborhood, a lot of memories, raised my family here. I love to live in a nicer, bigger, more fancy house. So the money from the Tesla stock I sold and put that into a down payment on a house I'm flipping to hopefully maybe a couple times into a nicer home. So that's the process. You have to work at it and work your way up the scale. And I think that be prepared to sacrifice along the way. I have a question for you, Shannon, if I can, real quick. To go back to the interest rate, do you have customers who bought a house maybe in April or in April when rates are 7.5% that might have refinanced come May? Did that ever happen? Does that happen that quickly, or does it take longer?
No, it doesn't happen. I have someone that bought in November and is still asking, if you bought the fastest that you can refinance is 6 months after your payment. You have to do the first six payments, and after that, you're eligible to refinance. So you, again, can you refinance before then? You may, but there may be some penalties there, depending.
There are
So
people when ran up to almost 8% back in October that probably refinanced when it's dropped down. I would think
yeah,
recently maybe. So
yeah,
again, the point is, I think that you got to sacrifice, get in the game. Don't buy over your head, but just know that it's not the pain isn't forever. Over time, theoretically, your income goes up a bit. Rates go up, rates go down. When they go down, you want to cash in your chips, and then you can take a house that maybe isn't really where you ultimately want to be, to sell that and move into something you can with the tax advantages. And that's what we want to think about as a plan.
yeah. So I think that's the big message for first time home buyers. The biggest and the hardest step is to get in the game. And it doesn't matter if you're in the game with a condo, with a mobile home, with a tiny home, get an asset. And like Bill said, hedge on inflation and let that asset give you the next asset, right? Have that asset make babies, right? So like
Mm-hmm.
you said, hey, whether it be stock, real estate, things of this nature that, hey, invest in that and have that asset build up in equity and then get you to the actual dream goal, whether it be, hey, I want to live in the best area, I want to live in a single family. Get in the game now. And if that means, again, your version of sacrifice, but a lot of people, the payments with a condo or mobile home, it might be the same as renting, or if not slightly higher, and it's a little cheaper than a single family, and then let that build up in equity and get you into the next game. So I think Bill's analogy of those stocks is really good, because and it's funny, I don't know if you guys see this, but some potential home buyers, they get discouraged if they can't qualify right now in this second.
Right.
And when they are discouraged, for some reason, they need to sue themselves and they buy a new car, or they do this, they do that, because they're like, well, I wasn't
Mm-hmm.
able to buy. So let me go buy,
It's
a
the retail
liability.
therapy. That's so
Yes,
shocking.
I've seen that, because I come back to the drawing board and I'm like, you have a new car on your credit. What happened? No, why we couldn't buy 6 months ago. So that it was that retail therapy. So I'm telling you right now, guys, if you need a therapist, come talk to me. No, I'm just like, but try to avoid that retail therapy and getting yourself into a deeper hole, and bite the bullet.
Mm-hmm.
Bite the bullet and get in, as soon as you can.
That's what I do. Buy Tesla. If you want to buy, a Birkin bag, go buy some Hermes stock or something and
Yeah,
enjoy the
LVMH.
LMH. Enjoy the stock as it appreciates, and then use that money to buy a house. There's all kinds of ways you can enjoy retail therapy. I enjoy looking at it on a bank statement on my computer. But that's the challenge. And I think, when I read real estate news, I do a podcast on this every week on the real estate market. That so much of the news is making people who feel uncomfortable want to give up or be discouraged, and so much of it is negative. And anything in life worth achieving is worth working at, and putting the time in, and pushing through the pain to get the pleasure at the long run. So
Yeah.
definitely in housing, I know it's difficult. If you have a chance to talk to Shannon or Patricia, it's a great chance to lick your wounds, and they'll let you cry on their shoulder, and they'll pat you on the back. I don't. I'm not that way, but no, I am. But I think we all have to be in this business, is understand that people sometimes can't afford what they want when they want it, but we want to
Yeah.
help them get it in the long run.
Exactly.
Right.
Exactly. There's no
I, w-
better time than now. Go ahead.
I went to an event this morning at the Hilton in Pasadena with our team leader, Nate Butcher. Branko was there, and some other industry leaders. And we were just talking about, the main message was about relationships, right? And deepening that relationship with your clients and people that you come in contact with, just people that you meet every day, right? So the more questions you ask, the nosier we are, is how we get to serve you better, because we get to learn more about your goals, learn more about the client's interests and what they really want to do. Sometimes you have to sit down with somebody for an hour, 2 hours, and really get to know them, and really dig into what it is that their dreams are, right? Once we get that information, we can really start to plan out what that is going to, how we can help you get there and achieve that dream of home ownership. And so I just wanted to also point out that there's always grants, which is money that buyers do not have to repay. So if we can get you a grant, that's another way that buyers can benefit right now. And these grants come and go. So I get these questions all the time. Well, what grants are available right now? Well, we have to check because grants come and go. The money gets depleted from the grant, and so then it takes a while before a new grant comes in, and the money's replenished into that new grant, and now it's available for first-time homebuyers. So also, there's money out there to be had and to take advantage of. So talk to us about what grants are available so that we can let you know what grants you can take advantage of that you do not have to repay back.
Yeah.
So speaking of grants, who's buried in Grant's tomb? Do you know?
I don't.
No.
Yeah, it's a trick question because officially speaking, in a tomb, one's not buried, one is entombed. So technically, nobody's buried in Grant's tomb. You, former President and General Grant and his wife, are entombed in Grant's tomb.
That's hilarious.
There you go.
Thank you.
You're welcome. Hey, I'm just a fountain of information here, whether it be real estate or tombs. I'm an expert on those topics.
That's fine. I did have a question for both of you guys. Are you guys seeing still seller credits, sellers, you know what I mean, offering credits or giving credits out? Is that something that you guys are seeing on your end, or that's dwindling now?
I've seen offers coming across with asking for credits. Yes, I've still seen that happening. Mm-hmm.
Yeah.
I'm seeing more FHA loans asking for credit for closing costs.
And
Which
is
makes-
it is something that sellers are still receptive to or not receptive to?
It's funny. Literally just today, you get an FHA loan, you talk to the lender, you talk to the realtor, you look at the pricing, they assure you it's going to qualify, blah, blah, blah. And then today I get the appraisal with a request for a huge reduction. And in this case, the appraisal, I think, doesn't meet appraisal standards. He had 3 comps. 2 of the comps were higher than our price. The third comp that he relied on was lower. But that property bought at $495. I'm sorry, sold at $495 to a flipper who resold it at $515, who 6 months later rehabbed it and sold it for $900,000. So the appraiser's using the third oldest sale of that property, not the most comparable house, but one that was already flipped and then rehabbed. But we're not going to count. He doesn't want to count that. And I just said to the agent, I appreciate the goal here to negotiate a deal for your buyer with the appraisal. I don't know how your appraiser signed a normal appraisal form with that on there, but that violates appraisal standards. Now, I was a lender and I know how to read an appraisal, and I just copied and pasted his words and used it against him. So I think that there's always a tension. I think that in a market like this where rates are higher, buyers are faced with perhaps a higher loan rate. Sellers, housing prices are not skyrocketing like they were. So sellers, that gap between buyers and sellers is increasing. And as agents, our job is to find a way to meet those two together to close the transaction. So I do think that whether it be seller credits or repair credits or negotiating prices, I do think we're going to be in a more stressful environment as things work out. And I do think that is very volatile, as evidenced by look at rates jumped up 3/8% here in the last week. And we have an election in November. Who knows what happens between now and then? I mean, I have had people predict cataclysmic events, and I have friends who are prepping for disasters, and other people are excited the economy is doing well. So I don't think we know, and we have to be prepared for it. But to answer your question, yes, I've seen more offers with FHA or conventional loans with finance credits, and I've also seen buyers sharpening their pencils and being more aggressive. Not saying we're going to agree. In this case, there's no basis. Their appraisal proves our value, so we're going to tell them thank you, but close or step aside and we'll sell it to somebody else.
Yeah, that's interesting. Actually, I had this same exact thing happen to a property that I had in close to the San Diego area, and I had to do an appraisal rebuttal and point out some of the things that are not on. So luckily they were able to adjust the price and increase it. So, again, have a good team to fight for you, even if it's fighting my own bank. There's sometimes the things you got to do, but it is a stretch. It is a little bit of a challenge, but again, nothing worth having is, comes easy. So the reason why I asked the whole seller credit is just for the first time home buyers out there asking, hey, is it still a flexible time for me? Is it still a market for me? And I say yes. You know what? Asking for credit within reason is good.
Yeah.
There's grants out there. There's also down payment assistance programs. So the funds should not be the primary issue for you. If you're buying a house, if you're seeing this right now, and I always look at loans. There's three pillars. There's, the credit, the down payment, and the income. As long as two are very strong, usually the other one can be lacking a little bit. So I say that to say that, if your down payment pillar is not that high, as long as your income and your credit are strong, you know what, they'll come in and get that. Or if you have a great down payment and you have great credit, but the way you file your income is not the greatest, hey, you know what, we can work with that. But you can't have two pillars low. As long as you have two out of the three that are pretty high, 9 times out of 10, we can get you funded some way, somehow. So if you're looking for down payment assistance, if you're watching this video, make sure you have great credit, make sure you have the proper income, because someone giving you the down payment assistance, the one thing they're going to look at is, can they pay for the loan, and do they have a history of paying people back? Because I'm pretty much fronting, all of the property right here. So again, the down payment should not be your number one issue, if that is an issue, but make sure you have great credit, make sure your income is solid, or if one of those are off, make sure the other ones are up to par. So make sure those three pillars, you have two out of the three when you're looking into buying a home.
If you don't have great credit, you can clean up your credit, a few months before you start. It reminds me, when I was dating my wife, I had moved into a condo, and I was a single guy. I wasn't really living there much. And so it was pretty neat and clean, but I was dating her, and she was like, come over and check out the apartment. So I hired a cleaning. Of course, I hired a cleaning company. Like Molly Major, somebody came in. I didn't really think about it. I wasn't doing it to fool her. I just thought, make it look nice. I'm having a guest over. That's just, it'd been a while. It'd been like 6 months I'd lived there before I had professionally clean. And so I remember my wife, after we were married like 2 years, said to me, I'm curious, you never clean anything. But when I dated you, you were so neat and clean. I said, I was neat and clean. He goes, yeah. What are you talking about? Yeah, you're always so neat and clean. I said, you mean my clothes stuff? No. The apartment, when I went to your house, it was like it was professionally cleaned that day. I said, well, it was professionally cleaned that day. I heard it clean before you came over. I never thought it as fooling her. I just thought that was something I did. And I think the same is true with credit. The bank isn't going to go back and see if you get, collections deleted and you get creditors to correct the history. We all of us have maybe some deferred maintenance of things we allowed or we didn't fight or what happened. But if you plan ahead, and that's why you said that buyers should be persistent, and if the answer is no for today, come back and do the work and come back in 3 to 6 months. One of my best friends in this industry, he passed last year, Greg Frost out of Albuquerque, New Mexico. He was the first $1 billion lender in the industry.
Oh, wow.
He had a process, and that was back when $1 billion meant a lot. Today it's pocket change. But he had a form in his office called Don't Give Up. And his rule was, anybody who came in for a pre-qual, if he could not pre-approve them or pre-qualify them, he would give them a don't give up form, and it would tell them exactly what they have to do. You've got to make more income. You could buy a house if you make $5,000 a month, you make $3,500 a month. The next year, if you can raise your income, get a new job, second job, whatever, qualify. Or you need more down payment. You need $10,000 more. Find a gift, save some money. Or we need to work on your credit. And we give them a plan. And you need to have people come back, 6 months, a year, 2 years later, with a do not give up form. And so I think that's always been my motto with people is, I'd rather than say no, it's to say, what do you need to do in order to qualify to buy a house or to get started investing in property? And so that we should all be positive, trying to encourage people.
No, and that's a great point. And the banks are just going to be like Bill's now wife, right? They're going to just come in that one day, see if everything's good, and you can close. So if your house is a mess, your credit's a mess, you know what I mean? That could, like you said, that could be fixed. We can hire a professional cleaner to come clean things up, and by the time they see it, everything's good to go, and we're ready to rock. So don't let down payment, don't let credit, don't let those things discourage you. I've seen it the worst of the worst when it comes to credit. Trust me, I never thought I would see something in the 4, even 3s, and I've seen it. But it can all be fixed. There's a solution for everything. So do not be discouraged. If you want to buy a house, make a decision today. I'm buying it no matter what, and there will be a way, especially with a great team.
Right. There's always a way. We
Exactly.
can definitely help you get there.
Okay, very good, guys. I think that kind of gives us the we're kind of coming in the witching hour here. Last words for the week, Shannon. What do we do to encourage people to now and next week?
Clean up your house. Clean up house. Okay. Clean up your credit. Get your down payment figured out, or get some down payment assistance. Make sure you have solid income, solid residual, and clean house. And get ready for that true person that really cares and that really matters, which in this case would be the bank and a seller, to see what you got going on. So do what you got to do right now to clean up your house and don't give up.
Fantastic. And Patricia, what would your word be for the week, or what would you advise
Well,
people?
Along with that, to piggyback off of what Shannon just said, once you do buy a home, you're in a new bracket for managing that budget and managing the payment for the mortgage, your insurance, your property taxes. So start getting into the habit today of saving money, right? You can start meal prepping, take your lunch to work a few times a week, start cutting back on the coffee runs. I mean, now Starbucks is what I just bought a coffee the day it was like $6.50. Right? So
Wow.
you can, yeah, $6.50
Que
for a
rica esta
latte.
chica.
So, I mean, I usually have my coffee with me or my green tea, but sometimes you do need to buy something when you're out. But I have friends that have it's habitual, right? Starbucks every single day. Those are things that you can start cutting back on to get into the habit so you're not in a payment shock. Once you do have a home, you don't want to feel like you're being deprived of all your favorite things. So you can start those habits today of just starting to cut back. So all the money that you're saving will go into your account for that down payment.
I love coffee, but I get coffee at home every week. I do have a particular brand I like and get it freshly ground. I have a certain way I prepare it. It's much cheaper that way. I'm just too cheap. I will say two things that I live a block and a half from a major boulevard, Pico Boulevard, where there are a lot of employees who work on the boulevard and park like in our neighborhood and walk by. Every employee at the dry cleaner, who I can't imagine what they make. I mean, I must make more in a month or two than they make all year. They all drive more expensive cars than I drive. Our cleaning lady every week comes with a very expensive coffee or tea drink from Starbucks. And I don't spend that money. And I'm not saying they are making mistakes. Everybody has their own life to live and choices. But if you want to buy a house and you want to accumulate assets, then you have to make some sacrifices. And if you're not willing to make sacrifices, you're going to be working for a job you may not like. You're going to be doing in the long run. And so I would just urge everybody, personally, make your own coffee. It's not that big a deal. But save money and have a plan and get together with Patricia or Shannon to get that plan into action. So how do people get a hold of you, Shannon?
They can find me on Instagram at Fund with Shannon, or my number is 661-317-8484.
Is it fun with Shannon? Like you go on parties and stuff with her?
Fund, F-U-N-D.
Funda. Oh, it's a D there. Not fun with Shannon. Funda. It's work.
Yeah.
Your fun Instagram is fun with Shannon. Then that's your personal one. Your fun.
That's my OnlyFans.
Very nice. Okay. And Patricia Castillo, how do people get a hold of you?
Yes, my cell is the best way. I've had the same number for about 25 years now. It's 365-9909. I'm giving you my sister's number.
You even know your own number. You're giving it out. And she got her cell phone when she was 5 years old. Her mother was very
Yes.
permissive, and that's why she is the way she is today.
That's funny.
Okay. I'm Bill Gross, at Bill Gross Probate and social media. You can reply here, text here, email here. Thanks, guys. Have a great week. We'll see you next week.
All right.
Thank you. Bye.
Thank you, guys.